Right now, at the end of January 2026, the global silver market is electrified with activity and price momentum rarely seen in decades. After years of gradual upward trends, silver has surged well above $100 per ounce on many markets, reaching record highs that have shocked investors and industrial users alike. Spot prices have traded above $100, with physical markets seeing spot silver demand hitting extraordinary levels. This rise is a vivid reflection of how industrial demand, supply constraints, and macroeconomic forces have collided to propel silver from a quiet metal into one of the hottest commodities in the world today. One of the main reasons silver has been trending so sharply upward is that global supply simply can't keep up with demand. Unlike gold, which is mined as a primary metal, about 70% of silver production is a byproduct of mining for other metals like lead, zinc, copper, and gold itself, a structure that makes silver supply inherently inflexible and slow to respond when prices rise or demand spikes. Over the past several years, this structural scarcity has translated into persistent supply deficits, meaning consumption has consistently exceeded freshly mined silver. Analysts today describe a multi-year drawdown of inventories, with above-ground stockpiles shrinking as buyers physically pull metal into portfolios in industry stockrooms. At the same time, industrial demand has gone through the roof. Silver is not just a precious metal, it's a critical industrial metal. It has unique properties, excellent electrical and thermal conductivity that make it indispensable in solar panels, electric vehicles, semiconductors, and advanced technological applications, including AI data centers and 5G electronics. This combination of clean energy policies, technological adoption, and infrastructure buildouts has put structural pressure on silver demand. Solar installations, in particular, consume massive amounts of silver, even as manufacturers try to use less per panel due to cost pressures. EV production absorbs silver at increasing rates because safety and electronic components rely on it. The result is a classic case of demand growth outpacing supply, and that dynamic is very visible in today's global market pricing. Physical market conditions are just as telling as the price itself. Reports from exchanges show tight inventories, elevated lease rates for silver, and unusual pricing patterns like backwardation, where the spot price trades above future deliveries, signaling a premium on immediate physical silver availability. Countries like India, one of the world's biggest silver consumers, saw imports and investment demand spike dramatically, straining currency reserves and prompting speculation around potential import duty increases to curb trade deficits. All of these tend toward higher silver prices and continued volatility, with traders and miners alike watching supply chains closely. While silver rallies on demand and scarcity, its twin haven asset, Bitcoin, is in a very different kind of political economic storm, reflecting how politics now plays a central role in shaping digital asset markets. Bitcoin today trades in a range near just under $90,000 per coin, with prices bouncing but still showing acute sensitivity to political developments and global macro narratives. The political influences driving Bitcoin up and down are complex and interconnected. One of the most immediate catalysts in early 2026 is U.S. macroeconomic policy and political uncertainty. The U.S. dollar weakened sharply following political events and criticisms from the White House about the Federal Reserve's independence, contributing to a significant sell-off in the dollar that lifted traditional commodities like gold and silver. Bitcoin has also benefited from this dynamic at times because digital assets are often viewed as an alternative to weakening fiat, but its response has been more muted and erratic, reflecting Bitcoin's evolving identity as both a speculative asset and a potential hedge. Fear of a U.S. government shutdown and erratic policy pronouncements have created a sell America trade in broader markets, where investors pull capital out of dollar-based assets and reallocate into commodities, foreign currencies, and even risk assets like Bitcoin. That weakening dollar backdrop has periodically lifted Bitcoin, but it has also increased volatility as traders reassess risk. Regulatory politics is another powerful force shaping Bitcoin. In the US, ongoing debates on comprehensive crypto legislation and delays in landmark bills create uncertainty. When regulatory clarity seems near, Bitcoin prices tend to rally because institutional capital, pension funds, sovereign wealth funds, ETFs, feels more comfortable allocating large amounts of capital to digital assets under a clear legal regime. Conversely, when key bills are postponed or watered down, markets often limp lower as risk premiums climb and institutional demand cools. The global political context adds even more layers of complexity. Some nations are actively embracing crypto innovation and regulatory frameworks, encouraging financial institutions to participate and positioning themselves as global digital assets hubs. These pro-crypto stances can support price rallies by broadening adoption and international demand. At the same time, geopolitical tensions, whether over trade policy, sanctions, or cross-border regulatory conflicts, can introduce risk aversion that pressures speculative assets like Bitcoin. For instance, shifts toward traditional safe havens like gold and silver during periods of geopolitical stress can draw investment away from risk assets. Political narratives themselves, the stories leaders tell about Bitcoin, matter a great deal. When politicians paint Bitcoin as a strategic asset, a hedge against central bank mismanagement, or part of a national digital finance strategy, markets often respond with optimism and price appreciation. Alternate narratives that frame Bitcoin as a systemic risk, a tool for financial crime, or a destabilizing influence on national currencies can drive sell-offs, or at least weigh on sentiment. Looking ahead, key political events, elections, regulatory milestones, central bank decisions, and macroeconomic policy shifts are all priced into today's market dynamics. Bitcoin's current range trading reflects this tug-of-war between political optimism about institutional adoption and fear caused by regulatory uncertainty and global policy risk. So, as silver races ahead, supported by structural deficits, robust industrial demand, and strategic policy signals around clean technologies, Bitcoin's path remains heavily influenced by political winds blowing from legislatures, central banks, and geopolitical conflicts.